I've heard a lot of stories of entrepreneurs starting out the business really excited, and along the way, things just don't go right, and they end up over leveraging, and as a result, they lose their homes, they lose their assets, they lose their business.
Today we have Joewin, a serial entrepreneur who has multiple success in many business in different industries. We'll hear from her unique perspective of how she runs businesses and why she thinks that businesses should all be financial literate. So a lot of people talk about personal investments, but rarely do I hear about financial literacy in business. What got you into this entire topic alone?
Sometime back, I realized that my personal finance was in a mess. I had debts and all that, and I asked myself, I've built these different businesses that were multi-million. Why am I in this situation? I realized that the way you handle your personal finance is also how you handle your business finance.
I believe that a lot of business owners, they also have problems like that. What I want to know is, how do I as a business owner know that I have a cash issue or I have a financial issue? What are some indicators?
If you don't even have like 3 months worth of expenses, you are pretty much on the brink of getting into trouble. When we did our research, at least 50% of businesses that have less than 15 days of cash buffer. So the moment you have any surprises, you are in trouble. When you borrow money to pay for expenses, you're just delaying the eventual collapse of your business. Numbers is the one that drives strategy, not the other way around.
If I am a new business owner, how do I even think about business numbers? Do you have any framework to guide me along? Welcome back to another episode of Man on a Mission. Today we have Joewin, a serial entrepreneur who has multiple success in many business in different industries. So today, we'll hear from her unique perspective of how she runs businesses and why she thinks that businesses should all be financial literate. Welcome, Joewin.
Welcome. Thank you.
Can you give a brief introduction of yourself, who you are, and what is the current business you're running?
So my name is Joewin. I've been running business since 2012. So that's a good, I would say 13, 14 years already.
Wow.
I started my first business in events management. So it was, at that time, when you're young, it sounds fun and sounds cool to be an event planner. So that was kind of how I got in. And then I went on to do a creative meeting event space, which was a collaboration with a Finnish brand. Yeah. And then subsequently, I also went to do different businesses like property investment in the UK. I did a fruits wholesale business. I did corporate gifts. And then now, my current stint, the one that I'm really focusing all my time on, is a financial literacy company. So basically, we started out as a lender, as an SME lender, and we very quickly realized that a lot of SMEs in Singapore, and I think probably it's the same for other SMEs around the world as well, that many of us do not have financial literacy. Yeah, so essentially, a lot of us are blindly chasing after revenues, and for what we're not very sure. That we just keep on going, and as a result, we actually end up risking our livelihoods. Yeah, because when things get difficult, we have to take on bank loans, and with loans comes with like a promise that, if you can't pay back, then the guarantee will kick in, and your personal assets are on the line. So that's, I've heard a lot of stories of entrepreneurs, starting out the business really excited, and along the way, things just don't go right, and they end up over leveraging, and as a result, they lose their homes, they lose their assets, they lose their business, and some of them, because of that, it wrecked their marriages. Yeah, so it's a very big problem in the market.
Yeah. Personally, I heard about financial literacy for individuals.
Yes.
Because the wealth industry in Singapore is very mature. So a lot of people talk about personal investments, how you should accumulate wealth. But rarely do I hear about financial literacy in business.
Yeah.
Right. So what got you into this entire topic alone?
The truth is, I think it was because of my own failures. Yeah, and beginning from childhood, I grew up in a rather poor family. So I think my dad actually made a lot of money, but the irony is that we were always struggling with money. So it kind of links back to business as well. Sometimes when you generate a lot of revenue, it doesn't mean you're doing well. So then growing up in the environment, when I was young, I always felt like God was unfair. Because I thought it was God that put me in this position where we have to suffer. Yeah, but as I grew older, I realized that it was a matter of, really being able to manage your finances properly. And even people who earn half or even a lot less than what my dad made, they could actually make ends meet. We had situations or times where we had our electricity or even water supply being cut off, and it doesn't make sense because my dad used to earn like 8K, 10K a month. And that's a lot of money.
Yeah.
in those days.
That's quite a significant amount.
Yeah, exactly. So
How do you know that though?
as in, how do I know?
Yeah. Because usually for parents' income or salary, they will kind of like keep it hidden, right?
Yeah, kids generally don't.
Interesting. I think maybe my mom told me.
Oh.
Yeah, and I think also my mom was always telling me that, I remember she liked to tell me that, when you grow up, do not be a slave to credit cards. This was her key advice to me. And I never understood. Because my dad over-leveraged on credit cards. And so because of the compounding interest, so it got us into a very bad situation. So my mom has a very, very big phobia of credit cards. And from young, she taught us to never touch it.
I see.
Yeah, so for a long time when I was an adult, I didn't dare to apply for a credit card until I was forced to, because I worked in Citibank. So then you have to have a credit card. You have to have
employee
like a bank account.
benefit.
The irony of it.
In a way. So then when I started using credit card and I pay back every month, then I realized, hey, actually the problem is not credit cards.
Yes.
It's the person holding on to that credit card that made a difference.
Let me hold you there a bit, right? Because there were a lot of points that was kind of like contradicting. First, you said he made a lot of money.
Yeah.
But then you said the family was poor.
Yes.
Then you mentioned also that he over-leveraged on credit card.
Yes.
But he had a very high salary.
Yes.
Yeah. So how do we understand the whole situation? Or how did you as a child understood the whole situation?
I mean, what I understood was that I think my dad was very concerned about putting up a front to the people around to show that he is actually doing well.
Okay.
So then he would spend on like expensive cars, big TVs and things like that. And a lot of these were beyond our means.
Yeah.
So then he ended up taking installment plans and all that. And when things don't go well, when he lost his job and things like that, that's when, you still have to pay those installments. So then we got into trouble and all that. So it was an accumulation of 30 years of doing this.
Oh, wow.
Yeah, and really going beyond, like even staying in a condominium when we couldn't afford it. We very well couldn't afford it.
I see.
Yeah, so then it kind of boiled down to, it wasn't how much he made. It was really how you manage the finances.
Correct.
Yeah, that could make the difference. Yeah, so as a child, I actually only understood when I was older. Yeah.
Right.
So then, and the funny thing is that when I started running my first business, I somehow did not translate those values to the business.
Yeah.
I mean, yes, I was still kind of like quite frugal when it comes to running a business, but I think at the same time, I also didn't kind of like think about managing my finances in my first business. Yeah, so then I got into a lot of situations where I was very cash strapped. Yeah. And I remember one occasion, I was actually cheated of, I think 30 over thousand in my first year of business.
Oh.
Yeah, and I was only 25 years old.
What business was that? The first one?
Events management.
Oh, the events management. Okay.
So I was cheated of 30 over thousand, and that was money that I borrowed before I left my job.
Oh.
Yeah, meant to start the business.
Okay.
Okay.
And being 25 years old, I didn't know any lawyers. I didn't know what to do.
Yeah.
So I just have to kind of like absorb the loss.
Tank the loss.
Yes. And
Wow.
and as a result of that, I had banks hounding me every day for money. Yeah. And that was a very, very stressful and
Quite
very
traumatic
dark,
at 25.
very, very dark period. And I couldn't tell anyone. I didn't want to go out there to borrow from my friends because I felt it was very embarrassing. Yeah, like, I went on to say, I'm going to start my business, and all of a sudden, can you lend me money? Like that doesn't kind of like position me very well. So I just had to suck it up. And I remember there was this, there were actually a couple of days where I have less than $5 in my pocket. It was that bad. Yeah, so I had a prolonged period where I always had to eat like cup noodles, bread and all that, because this was just the cheapest way and for survival. Yeah, so it was a very, very difficult period for me. And so then I kind of like went on to do my second business, third business, and I still didn't really fully understand the context of managing money.
Yeah.
Until I think maybe at least 6 years ago, I was caught in a position where my personal finance was in a mess.
Oh,
Yeah.
okay.
Yeah, and
I
that
was,
was
I was going to ask something there though.
Yeah.
Because when you say like your background and all
Yeah.
that, generally I think that if you had that background and
Yeah.
all that, probably you have certain mindset about your personal finance and all, right? Did it translate to the business, or did that
I think
propel something different?
the only part that translated was the frugality. because I was trained to be frugal as a child because we didn't have very much. So that part kind of stayed on. But all the other parts of like financial literacy, I didn't have and I didn't carry through from as a kid. Yeah. So then I think it was sometime back when I realized that my personal finance was in a mess. That I had debts and all that. And I asked myself, I've built these different businesses that were multi-million. Why am I in this situation? Why am I having debts? I should not have debts. And I'm someone that is still quite prudent with how I spend.
Okay.
Yeah. So I couldn't understand, but
what kind of debts do you have? Is it like property debt or?
Property debt, yes.
Yeah.
And also like, I have personal like bank loans, credit card debts and all that. And I'm not someone that spends a lot. So to get into this situation, it was a very difficult thing to deal with.
Yeah.
And then I kind of, one day I just sat down and looked at everything, like really, really, really had a very honest reflection on what went wrong. And then as I started to uncover things, it brought me back to when I was a child. Where my dad also made a lot of money, but we were in that state. So then I kind of started to join the dots and realize that, this is actually all about financial planning, about managing the money, about how you handle this. And then there was this moment I'm like, actually, there are a lot of mistakes that I made here that I also did in my business. So I realized that, the way you handle your personal finance is also how you handle your business finance. You can't change very much. So I realized I take with myself a lot of bad habits. In both aspects. So there was a lot of learning point. And then subsequently, when I moved on to other businesses, I started applying whatever I learned and kind of like figure things out. So that was really how I kind of come from this position to a position where I feel like, now I actually know what's going on with my numbers.
Okay. I think there's a lot to unpack. But before that, can I suggest you close your screen?
Oh, okay.
Because you keep looking at the screen, but there's no notes there.
Unconscious.
Unconscious. So you'd rather not have something to distract you.
Sorry.
That's good. Okay. So I think there's a lot to unpack because it started off with your family, how you see your family behave when it comes to money, lifestyle, right? And then, of course, that brought you into the business world where you experienced your first debt at the age of 25. And 30K is not small. I think any business owner will understand that, right? Then, of course, throughout, you had ups and downs, and you start to ask yourself the question of why, despite me owning multiple businesses, why is it that I still have that debt? Right? Why can't I pay off my debt? So, if you were to look back at this entire journey, right, and think about this issue of financial management, right? Do you think, because I believe that a lot of business owners, they also have problems like that, right? They also have their own bad debt, credit card loans, right? Their personal admin, business owners will always like say, wow, I hate admin, right? And personal admin is a mess, and therefore business admin is a mess as well, right? So in your perspective, right, how do you see financial management? Because financial management is a big word.
Yes.
So how do you understand financial management?
You mean in terms of business?
Yes.
As a whole?
Yes.
So I think for a business, like financial management comes down to 3 key things. So the first one is actually getting your business profitable. That's the most important thing because ultimately that's the reason why businesses exist. You have to be able to sell a product or service that is above what it costs you to make, to deliver that product. So that's the main thing. The second part of it is in terms of timing. So if you sell a lot of products or services to customers, but you don't collect those money on time, then that's gonna cause a choke in your finances because then you don't have money to pay the bills that you need to pay. You can't pay rent, you can't pay salaries, and you can't use uncollected profit to give to your employees and say this is your salary for the month. So it doesn't work this way. So the second thing is about the timing. So in cash flow, in short, and the last thing is about implementing like a system such that it is actually very easy to manage and stay on top of your numbers. Because the truth is that numbers actually tell you a lot about what's going right and what's going wrong in the business. So when you're able to do that, when you're able to look at your numbers by creating like a schedule that you watch your numbers every Friday, then that way you get into the habit of doing it. And it's not easy in the beginning, always. Every habit that you create in the beginning is always hard. But once you get the hang of it, it's going to be really easy and you wish you had started earlier.
So we'll go into the details of the 3 pointers later, right? What I want to know is how do I, as a business owner, know that I have a cash issue or I have a financial issue? Or some indicators?
Isn't it just
or red
no
flags?
money in the bank?
I mean, that's one indicator, but that's like a really red flag already.
Yeah.
If by the time you run out of cash in your bank, that is dangerous. So before that, if you don't even have like 3 months worth of expenses, you are pretty much on the brink of getting into trouble.
Okay,
So
yeah.
magic number is 3 months worth of expenses.
Minimally, depending on what industry. Because there are certain industries, let's say you are in the tech space, right? And you are non-revenue yet. You can't just have 3 months. You need to have 1 year or runway. So it varies from companies to companies depending on what is your business model.
Yeah.
But for a traditional products or service business, at least 3 months. If you have less than that, you are definitely a red flag already. The more the merrier, of course.
Yeah. Because usually for business owners, right, we will have an accountant.
Yeah.
Right. So the accountant will help us sort out numbers and then they'll give us a report at the end of the month or whatever cadence we prefer, right?
Okay.
So is that not financial management?
Okay, then I ask you back the question. So when do you get like your financial numbers from your accountant? Usually it's at the end of the year, maybe 3 months later after they consolidated. So
usually I will go to Xero myself to look at it. But if I need the information.
But typically those things, so there's two points there. One is that those numbers are usually, a lot of SME owners, what happens is you only talk to your accountants at the end of the year when it's tax filing. Yeah.
Yes.
Then that's when you rush them to finish and then they chase you with the questions and the queries and then you find them so annoying, but they have to get their job done.
Correct.
And then when you see the numbers, you're probably already like, the following year already. So those are historical numbers. That's one thing. The second thing is that I think a lot of business owners, what we like to do is we just depend very much on our accountants. So a lot of assumptions in terms of how revenue is being booked, how things are being categorized, right? Essentially, you leave it up to accountants.
Yes.
So then when you read your numbers, right, essentially what you're reading is the assumptions that your accountant has.
Their interpretation of how your business is, even though you are the business owner.
So essentially, your business is being controlled by your accountant. If you are managing your business based on the numbers that you look at, which the assumptions are created by your accountant, essentially your accountant is running your business. Yeah. So I give you an example. So if let's say you're in the service line and you charge your customers upfront, right? Say let's say 6 months consultancy, you book the revenue in the beginning because your clients pay upfront.
Yeah.
If your accountant doesn't do accrual in the sense that they don't divide the revenue into 6 different months and book it accordingly, and it books the whole lump sum at the start of the year, you may be making very bad decisions. You will probably think that, this month we did really well. Let's go buy something. Let's go buy new office furniture. And all that because you're relying on those numbers. So step one, when it comes to working with accountant, the main thing you really need to do is define the parameters as to how this accountant can work with you. And accountants are very smart people. You just need to tell them what are your parameters and they can create all the backend for you. Let's say in Xero, they will create like a chart of accounts. And if let's say you want to know the difference between like say the sales of product A, product B, then that's when they can help you create that on the backend. So then whatever that is being recorded will have that kind of data that you can use to manage your business decisions. Because if you don't have that, and then one day you look at your accountant, which product is more profitable? They will look at you and question mark, I do not know. And it's not that they haven't done their job. It's because they don't know what you want.
I see.
Yeah, essentially that's kind of how it is.
I see.
I guess there's a difference in the mindset for business owners of understanding the role of an accountant in the first place.
Yes.
Yeah.
Right, because if your accountant is purely bookkeeping so that you can take this and submit to IRAS, then there's an issue because your accountant is literally just doing that for that singular purpose, whereas numbers and all that should be a reflection so that you can make proper financial decisions.
That's right. Yeah, it's true. And I think a lot of us, we see accountant as, okay, like end of the year, just prepare my tax for me. But actually their role is so important that it helps you, when done correctly, it helps you to actually do predictions. It helps you to make the right decisions. It helps you to see the possible threats and opportunities that are actually ahead of you. Yeah, and business is a lot about forward thinking. Yeah, so you can use historical numbers to tell you what to do next. Yeah, more so than just, this year I made I made, let's say 200,000 and okay, let's go and celebrate. That's kind of like passé. It's over already because it's historical numbers.
I see.
Essentially.
Yeah, I've also spoken to another accountant who was just saying that one of the things that a lot of businesses don't actually do or are not cognizant enough to do it is actually proper budgeting forward.
Very common.
So is that something that you see as well, and how does that impact?
Isn't budgeting forward expenses for the month and then you have enough cash in the bank?
I think it's two ways. So when it comes to budgeting, it's a lot more kind of like reflective of expenses. But there's also another part where it comes to, forecasting your sales and all that, so that you manage your expenses within that. Yeah. So very often, because a lot of SME owners, they don't have big teams. So a lot of us are like firefighting, and then we end up not having the time to actually sit down and plan.
Yeah.
And that is dangerous.
Correct.
Yeah. So what happens is you could very much end up spending too much on like the expenses without even knowing. And then every month you're just wondering, why is it that I'm making losses? And you don't know the reason. It could be just because you are spending more than you earn.
I see.
Something as simple as that. Yeah, so things like that.
I want to talk about the landscape, right? How bad is bad? Because you're in the SME lending business, so you will have data on the ground.
Yeah.
Right? So if you look at SMEs in Singapore, what are some of the red flags or red banners that you see for businesses? Is it very common for them to not have money at the end of the day and then they borrow?
Yes. I think generally speaking, if you go to any business owner, you ask them, so what happens if you can't pay rent? They will tell you, take a bank loan. That's the first thing that they will answer. And they're not wrong. Of course, bank loans or even like, non-financial institutions, like the loans out there are actually meant to help you through difficult times. Yes, that's true. But that being said, loans are typically supposed to be used for fueling growth, not meant to actually help you cover for expenses. Yeah, so essentially, you think about it. Let's say today, I borrow, let's say 100,000.
Yeah.
And then I use it to pay off, like say the outstanding rent or whatever. And by the time maybe 6 months later down the road, right, you have really used up that 100K, right?
All right.
So then you're in a position where you have already spent future money. So then you're trying to pay back future money. And what if you don't get the additional sales? Yeah. So if sales just remain the same, initially you were already losing and you still have an additional amount to pay for. Isn't that more stressful?
Feels like a black hole.
It is. And you just, when you borrow money, what happens to pay for expenses? What happens is you end up, what I like to say is you end up borrowing time. You're just delaying the eventual collapse of your business.
I see.
To put it in a very blunt way. Yeah, because you're digging a even deeper hole. Yeah. So basically with this loan comes with the cost. The cost of the loans itself, and that will add on to your plate, and that is very stressful.
Yeah, this reminds me of something, because I think during COVID times there were a lot of bridging loans, right?
Yes.
Temporary bridging loans.
Yes, correct.
Yeah.
But I think the very, very important part about loans is understanding the context of which you're borrowing upon, right? So the term bridging loan means that it's for you to bridge between your accounts receivable, right? Or the future money that you know you are going to take already.
Yes.
Right?
Yes.
It's not supposed to be for future closing of sales that you haven't seen yet.
That's right. Yeah.
Right?
Yeah, essentially, that's a very nice way to put it.
Right. So the interesting thing is, I think even that time, I heard a lot of talks about like, there's a temporary bridging loan.
Very low interest.
Interest is so low. We should just take it.
Okay. Yes.
So what do you think is that mindset there? Do you agree with this mindset? What is the danger there that we're seeing?
I mean, technically, it was very cheap loans. I mean, it went as low as, I think, around 1.5% at the lowest.
Wow.
And that is super
admin fee.
attractive. Yeah, exactly, right? That is so attractive and unheard of.
Yeah.
It's even lower than housing loans.
Yes.
Right? So
Yes.
in Singapore, the cheapest loans are always housing loans because it's secured.
Yeah.
But those days during COVID, loans were actually offered at as low as 1.5% because the government was co-sharing the risk. So that was possible. And I think to answer your question about that line, we should just take it first. Technically, it's not wrong. However, it depends what you're going to do
With the money.
With the money, that is very important, because what a lot of businesses do is especially those who are very, very financially savvy, those businesses actually take those loans and then they went to buy out competitors that were dying.
Oh, very smart.
Yeah,
wow.
because those
Very
days when the
smart.
competitors were dying, it was really cheap.
Yeah.
So then they just went out and buy. They used the loans, which was only at 1.5%. They went to buy these guys out. And when they consolidated, they had a lot of cost savings and they could expand their market just like that. So then it made sense. So technically, that's a correct statement.
Right.
But if you're going to use it to tide through, I've got no money to pay rent, I've got no money to pay salary, that's when it's going to get difficult. Because yes, the market was going to open up eventually, but are your sales going to come back? You know, you have already spent future money. So then that was very dangerous. Even at 1.5%, there were actually quite a lot of defaults in the market. Yeah, simply because 1.5%, if you compound over time, is actually quite significant as well. And if you take a big sum, like a 500,000 or 700,000, that is going to come up to quite hefty at some point. Yeah.
So it's interesting because the same action, which is taking a loan, but with a different business decision,
Yes.
can put you so many miles and worlds apart.
Yes.
Wow.
Yeah, I'm just thinking, damn it, we didn't know about
Yeah, we missed that. We missed that opportunity.
we missed the boat.
boat.
But, yeah. But
So is it wrong to take money and buy property?
You mean in
your
business?
bank?
In
No,
business?
take the temporary bridging loan to buy properties.
Personal or business?
Maybe under the business. Then you own like a investment
Technically
property.
is not wrong.
wrong,
But
okay.
if you buy properties, you would use secured lending. Yeah, basically.
Okay.
Yeah, because when you do secured property loans, the tenure will be stretched out.
So temporary is way
Temporary
shorter.
bridging loan. So
that makes
business
sense.
loans tend to be shorter, like 3 to 5 years.
Okay.
By nature. Yeah,
Yeah.
because it's not meant to give you a long-term thing. But when it comes to secured lending, like say for a property, like a mortgage, even for business offices and things like that, it will be stretched out so that your mortgage amount is actually very palatable. Yeah.
Okay.
Yeah.
I believe you prepared some numbers on the COVID situation.
Oh, yeah.
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 Would you like to share with the audience how bad was the COVID?
Yeah, so actually, during like the entire 18 months of COVID, there were actually about 73,000 businesses that shut down just within 18 months. So that's about, say, around 4,000 businesses closing down every month.
Wow.
So about 100 over per day. So that was very shocking. Even with loans that are at 1.5%, right?
Correct.
A lot of businesses don't survive.
Yeah.
And when you think about, the different reasons why businesses don't survive, right? It could be, you have a competitor in the market that offers a really cheap product. It could be that, you made an error and then it resulted in a loss. So it could be for different reasons.
Correct.
But one of the common thing that would happen right before any of these companies go out of business is they run out of money. So money is like the blood in our body.
Yeah.
You can't not have money.
Correct.
Yeah. So actually, it's that's the reality of what's happening, and it's so critical that business owners like us really need to pay a lot of attention to the finance part of business. Yeah.
And I believe there were statistics to show, on average, right, how much money they have in the bank and how much they can last the company.
Yeah. So
If not for,
Yeah, so actually, what we realized, I mean, when we did our research, there's at least 50% of businesses that have less than 15 days of cash buffer. So 15 days is not even a month worth of expenses. So they are running on. They are not paid. They are not paycheck by paycheck.
Yeah,
they're
they're
worse
week by
than
week.
that.
It's like empty
essentially
fumes
it's
already,
like
lah.
2 weeks by 2 weeks, which is very
Scary.
dangerous. Yeah, so the moment you have any surprises, you are in trouble.
correct.
Yeah.
Sounds like a car with the petrol tank going.
Oh yeah,
blinking.
essentially yeah. So that's what they are trying to do. Taking a road trip with very little fuel.
I see.
Yeah, that's dangerous.
I see. I wanted to ask, what is the cause of this? Because 50% of SMEs that only have 15 days to last in their bank is a very alarming statistics if I were to understand this.
Okay.
I would think that minority, you tell me, okay, maybe 10% only have 15 days left in the bank. I think that makes sense.
Yeah.
Right, but to think about significantly 100 over 1,000 of SMEs who are on the red alert,
Yeah.
Yeah.
that's a very
That's
shocking
scary.
statistic.
And that's scary because even on personal finances,
Yeah.
right? Most people will say you must have at least 6 months worth of
Correct.
salary, right?
Yeah.
If you want to make any changes, you can do that, or you get black swan event retrenchment or whatever
Yeah.
it is, right? Touch wood.
Yeah.
Then you can tong for 6 months. But to hear a business with multiple salaries that you have to pay, with expenses that is fixed, that's going out, having 15 days. Wow, that is scary.
No wonder business is so stressful.
I mean, if you look at it, there's only two reasons why you don't have enough money, right?
Yeah.
One, you don't make enough. Two, you
Okay.
spend too much. So it's just these two primary reasons. So I think most business owners like to, it's just human nature. We like to blame someone else.
Yeah.
Say that, okay, market is bad, too many competitors and all that. But if you think about it, you say that, there's people are not buying this. Then you look at your competitor who is making like maybe 20 times more than you. People are buying. It's just maybe the offer that you put out there is not something that's palatable.
Correct.
Right? So if I give you an example, like say if you think about an iPhone, it's really expensive. There are people who maybe only earn like 2,000 a month, but they
They'll
will
still
spend their
buy,
entire month's salary to buy that. Why? Because they see the value there. So it comes down to not being able to make enough revenue and overspending. And this overspending thing is a very, very big thing that I think a lot of business owners are not aware. So from my experience in working a lot of customers, we realize that they are spending beyond their means very often. Yeah. And it can come with a variety of it's not just in terms of big offices and all that, but even I think the primary suspect is actually the manpower. Because the two biggest expenses for any company a lot of times is rent and salaries, right? So especially if you're a service business, rent is not that much, but usually it's the salaries. So then it comes down to so one of the things that we work with our customer to sit down is we talk about the labor productivity. How much are your people actually generating? Do you actually have a good ratio that makes sense? Very often when we look at numbers, right, we realize that SMEs are spending too much on manpower. And it's not to say that it may not be that you're let's say hiring too many people and all that and whatnot, but I think more importantly we should think about how we look at maximizing each of these people that we hire.
Correct.
So I'm in no way I'm saying you should fire half your team. No, but rather how can you let's say automate a lot of their work so that they can focus on high value work that delivers the value to the company. So do you know that actually Singapore is, I think, the second or third country that's being ranked that people like to go to the office and just work for the sake of working, like act busy. It's a real statistic that I saw in an article.
Japan.
I don't know, but it was that Singapore thing that kind of brought my attention. And, and it brings back to the conversation of, do you really need your employees to sit in the office to know that they're productive? When they're sitting there, are they really productive? So if not, then why are you spending money on rent? Why are you renting big offices and having everyone there? How about doing virtual? How about working with, say, co-working spaces and things like that? So that way you can bring down the cost and you can also focus what's most important for the output for this employee. So really focus on that to ensure that they are actually delivering what they have the potential for.
I think a lot of times for businesses especially, right, it's very tied into pride.
Yes.
Yeah, because I think your first experience with that is with your father, right? Where he has to keep up with a certain lifestyle. I mean, even if you are not someone who will love branded goods, but as a business owner, sometimes if you have a big man team, it's an indication of success.
Yes. Right? Yeah, I love it when you go to networking groups and then people ask, so how big is your team?
Yes.
So now I like to ask, how small is your team? Because that's the reality, right? You want to learn from people who are able to deliver
streamline.
They can drive so much value with just that few number of people. And this is not just you don't just see that in tech anymore, because now AI is so readily available for everyone to capitalize on. So we're seeing more and more trends that businesses can actually adapt and jump on the bandwagon. But I think as SME owners, a lot of us are busy firefighting all the time. So we don't even have time to go and research. We don't know what to do. And AI moves so fast. Like every 6 months, there's a new thing and all that. And if you're already spending time to think of how do I pay the next rent, how do I pay the next the salaries and all that, you're not going to have time to look into all these things, right?
Correct.
Instead, if you have people with spare capacity, can you assign them the role to do something like that so that it actually delivers value back to the company? A lot of people, they can actually take on a lot more work.
But I think on manpower, right, it may not just be on capacity. So I have a story to share, right? So a friend in the service industry projecting certain amount of work that was going to come in, hired in 3 or more on the team. And then when it actually happened, when the month came around and the appointments were not filled, it was way less than before. So it's the issue here was not that they were having the team already. It was just a sudden over-hiring.
Yep.
And I think that one is also one of the issues as well, because I think depending on business owners' mindset, right? There is this mindset also, if I hire faster, bigger team, I win more because I take bigger share, right?
Okay.
Yeah.
Okay.
So is that also a thing that you see with the businesses?
It's a myth. Based on, working with my clients, even myself, I have experienced this before. It's really a myth. So when it comes to, hiring, it's the same thing for expenses. One of the principles that we always teach our customers is don't spend until you really, really absolutely have to. So the best kind of businesses are the ones that scramble to find the manpower when the job is already in.
I see.
And you think about it, if you do have the job, you have the money, you're not worried that you cannot get resources, right?
Yeah.
You just make less. It's okay, right? You can even talk to competitors to say, hey, I need this. Can I outsource this part to you because I cannot find anybody? I think they would be more than happy.
That makes a lot of sense.
I think they would be more than happy to take that part. And you can actually work with your competitor. There's nothing wrong with that, right?
Yeah.
So why are you in a hurry to hire? Because you have this FOMO mindset. You think that if I don't grab these people now, they will be gone. But the truth is, your employees can leave anytime. They are not tied to you. You don't own them. They can leave tomorrow even if you hire them today, as long as they pay the bond. So then what difference does it make? Why are you in a hurry to hire people and then start paying them? Yeah, every hire you make is a risk.
Yeah. I think pride and ego aside, right, there's also the camp that sees their employees as family.
Yes.
Okay.
In tough times, we stick around.
Okay.
Absolutely.
Yeah. So I think the tough part is to think about firing when the business is not doing well, because it feels like I'm a parent, I have kids to take care of, and in bad times, then I have to hold them and make sure they're well taken care of, even if it means a rate for me.
No,
loss for me.
I don't think that is a bad mindset to have. In fact, I think it's something that I still believe and I hold true. But the thing is, you have to be practical as well. You have to realize that in situations where the business is in financial trouble, if you hold on to everyone and the company collapses, everybody ends up losing their job, right? So the main thing is always the survival of the company first. Then you take care of other people. So end of the day, if let's say you have to let people go, they can find another job, especially if they are good people. And what you can do for them is say, perhaps, recommend them to your friends who are also running businesses and things like that. But if you continue to hold on to them when you have no ability to pay them, what's going to happen? You're going to end up
everybody lost.
You owe them salaries. They're going to hate you anyway, right?
I think it may hate you more.
Yeah, then everybody loses.
Yeah.
Right, but if you let them go and let them go to a place where they can find another job and all that, I think it's a win for everybody. So I think business owners, we shouldn't be so, I would say, caught up in the mindset that, through thick and thin, I have to hold on and defend my people. Because if you have no bread left, how are you going to feed your people? So you need to make sure there's bread on the table first. So always survival of the company first, then you can take care of people. So like you take an airplane, they always say put on your oxygen mask first, then you work for your child. Does that mean you don't love your child? That's not true. Your child is everything to you, but unless you're taken care of, you can't. Yeah, so I remember I read from this book, they say that you cannot give with an empty bucket. So you must always fill your bucket first, then you can help.
Yeah, that's a good one.
That's kind of like the philosophy of even in hiring as well.
Yeah, absolutely. I think 100% because I've come across a few business owners who are literally describing to me how heartbroken or how painful it is to go through that process that they don't want to do it.
No, granted, it is difficult.
I think it's absolutely difficult, but I think certain prioritization needs to take place as well.
That's true. And kind of like reality check.
Correct.
In that sense, if you really cannot hold on to someone, it's better to let them go to somewhere else where you don't have to end up in MOM trying to fight for you to pay for their salaries that you owe them for 3 months. Things like that. So I think that reality check part is something that business owners like us really need to think about.
I think there are two separate problems here, right? Because one is you don't have enough sales,
Yep.
or you need more time to find more sales.
Yes.
The other is cash flow, right? So under what circumstances do you make the cut? If it's a cash flow issue, right? Then what is the lever, right, of seriousness do you make when you decide to retrench versus decide to hold on?
I mean, you see, so I give you an example. So if you're in a situation where, let's say, cash flow is an issue, so meaning that actually you're profitable, you're doing well, but cash flow is an issue such that you have no money to pay salaries.
Correct.
Then you better pick up the phone and call your customers to pay you. If, let's say, outstanding debt is a problem,
What
right?
if my customer is the G?
Oh, well, the G has got 30 days leeway. So their credit term is always 30 days.
Yeah.
So you just need to make sure you bill on time. Yeah. Generally speaking, based on my experience with the G and my customers, so far 30 days is, I think, reasonable. Yeah. And it's usually like kind of like after the service or good has been delivered and all that. So that's pretty okay. I think the tricky part is when you work with companies like B2B, when you have to give 60 days, 90 days. That is very stressful.
Yes.
So one thing that we always teach our customers is don't give credit terms until being asked.
Assume is
you
100% close
You
first.
assume all business customers need credit terms, but actually it's not true. Yeah, if honestly, if what you do for the customers is valuable, you tell them that our policy is upfront, they will pay. Yeah, they will pay. They are not going to not work with you. So there will be customers who say, no, cannot. We only can do 30 days. We must have some credit terms. Then you give.
I see.
The rest don't give. So don't
That
assume
is gold.
everybody needs it.
Yeah, that's a golden tip.
It's very simple, but people just don't do that. I've heard of people who say, oh no, my customer is, let's say, a big brand in Singapore. If I don't give them credit terms or if I chase them for payment, they won't hire me again. Then I'm like, okay, good. Stop working with them. They are dragging your cash flow back. So I think a lot of us, we're very afraid to cut away unprofitable customers or even customers that actually has a very big strain on our cash flow.
Yeah.
We're afraid. We're afraid that, it's bad for the business.
Correct.
But if you really study the numbers, you will realize that sometimes cutting away these unprofitable customers may be better for the business because you have the capacity to work with the customers that don't need credit terms, can pay on time, and you can get more of these customers.
Yeah.
Yeah.
As a marketer, then I would say, is it possible that we can create an offer, right, for the companies to pay upfront? So perhaps to take into account the cash flow, right? So what's the cost for cash flow?
Correct.
Right.
I mean,
and then
so
perhaps
I
charge it.
think that's a very, very interesting point because if you think about our industry, like products and services, the people who always get, the businesses that always get their cash flow dragged are always those that does service. Then those that do products are always those that get paid upfront. So you can't buy a t-shirt without paying for it first online. Then it'll get delivered to you.
Right.
So one of the things that we try to, I would say, encourage or even like push our customers to think is there any way you can make your service like a product?
Oh,
So
okay.
it's kind of like two prongs of approach. So one way is that you get the payment upfront. The second way is there any way you can make your service such that it's systemized down to maybe, I don't know, 5 steps, 6 steps, and then it kind of behaves like a product.
I see.
Oh, upon delivery of step 1, there's a
Like,
certain payment.
Like in terms of how you deliver the service. So imagine if, let's say, marketing consultancy. So let's say your step 1 is you'll do a diagnosis. Then step 2, you will do blah, blah, blah. So can this whole thing be a so-called a product that you sell? Can you productize your service? So
see.
that way you can actually tell your customer that, oh, this is our product, and then we charge like that, and this is how it is. So then take it or leave it. In that sense, So that could be one of the things that we are like, we actually encourage our customers to think about. Yeah.
Okay, let's take a break on this first part.
Okay.
I think we heard a lot of very good stories and reason why we need to really look into our cash flow. And the next part, right, we want to be talking about strategies.
Okay.
Right, strategies on improving cash flow, improving financial management, and of course, create a profitable business. See you.
Okay.